Today we will discuss the concept of deductions and rebate. Deductions are discussed in Income Tax Act 1961 under Chapter 6A, that is the sections 80C to 80U, and rebate has been discussed in the section 87A. The income which a particular individual or the assessee earns, the summation of all heads of income, that is the 5 heads of income, is known as gross total income, and the assessee doesn't has to pay the tax on the gross total income. Here the assessee will be given some deductions under Chapter 6A or under sections 80C to 80U on fulfillment of certain conditions. So we will, and if these deductions are deducted from the gross total income, then only we get the total income or taxable income, and the assessee has to pay the taxable income tax on this taxable income or total income or net income. Today we will discuss the first item of our deductions, that is section 80C. Before coming to the deduction 80C, we would like to discuss some basic concepts or rules or exceptions regarding the deduction. From gross total income, being aggregate of the income under the 5 heads, assessee can claim the several deductions as specified in Chapter 6A on fulfillment of prescribed conditions as laid down in the respective section. After allowing this deduction, total income of the assessee is arrived and tax is charged in the prescribed rates. Basic rules are there. Number 1. Deductions are not available from long-term capital gain, short-term capital gain under section 111A, and casual income like lotteries, races, etc. Limit of deduction. It is one of the important things which is to be kept in mind. The aggregate amount of the deductions under Chapter 6A cannot exceed the gross total income. Cannot exceed the gross total income excluding long-term capital gain, short-term capital gain under section 111A, and casual income like lotteries, horse races, etc. Deductions must be claimed. In this case, it is to be kept in mind that the deductions you have to claim for it, and the necessary documents the assessee has to submit with the proper authority. Double deductions is not permissible. Where deduction under section Chapter 6A has been claimed, the same shall not be qualified for deduction in any other section. So these are the basic rules we have to keep in mind. Today we are starting our discussion with the section 80C. 80C, this deduction is available in respect of life insurance premium paid, deposit in the post office, bank, mainly 5 years, deposit in the provident fund, that can be public or recognized provident fund. So under section 80C, there are some items which are to be kept in mind. There are so many items, but we are saying from the viewpoint of the BCom's perspective. Generally, the items which are taken into consideration for the BCom Honours and General Examination under the University of Calcutta. The items which are given, that is number 1, life insurance premium. In any case of an individual, policy should be taken on his life, on his own life, on spouse, on child. Child may be dependent, independent, male, female, minor, major, married and unmarried. Number 2, in case of HUF, on the life of any member of the family, premium paid on life insurance policy exceeding 10% of the capital sum assured is not eligible for deduction. That is, maximum allowable amount is 10% of the sum assured. Here it is to be kept in mind that life insurance premium on sons or daughters' life is eligible for deduction, but life insurance premium of parents is not eligible for deduction. Number 3, contribution by the employees towards the statutory provident fund, recognized provident fund, contribution to the public provident fund, and contribution to the employee towards an approved annuation fund. Next, subscription to the National Savings Certificate. 8th issue, any interest accrued on these certificates which is deemed to be reinvested also qualified for deductions. Generally, 6th year interest is not qualified for deduction. Next, contribution for participating in the Unit Linked Insurance Plan, ULIP, of Unit Trust of India or LIC Mutual Fund. Any sum paid as tuition fees, not including any payment towards the development fees, donation, payment of the similar nature, whether at the time of admission or otherwise to any university, college, educational institution in India for full-time education of any 2 children of the assessee. Any payment for purchase or construction of the residential house property, that is the principal amount, is eligible for deduction under this section. And under amount invested in approved debenture, in equity shares in public company engaged in the infrastructure development including power sector, amount deposited in the 5-year or more term deposit with a scheduled bank or post office. Here one of the things is to be kept in mind that when we are paying the EMI of our housing loan, the principal amount is given deducted under section 80C and the interest amount is given deduction under section 24B. Here the total amount is to be considered, and the total amount here, it is considered as gross qualifying amount, and it is to be compared with the standard amount which is given in the income tax, which is 1,50,000. That is the amount of deduction under section 80C, gross qualifying amount, or rupees 1,50,000, whichever is lower. Gross qualifying amount or 1,50,000, whichever is lower, is given as deduction. So this is all about the section 80C. Now we will discuss the another important section, which is 80D. 80D, this deduction is given in respect of the medical insurance premium. Medical insurance premium, that is, it is eligible to the assessee. It is eligible to the assessee, and in this case we have that is categorized the assessee into 2 types. That is the assessee himself and the father or mother, that is the parents of the assessee. Here it is to be kept in mind that the assessee, assume Mr. X is providing or depositing the medical insurance premium on his own life, on the life of the spouse, and his daughters or sons, that is children. And if he is not a senior citizen, then the maximum amount of deduction, including preventive health checkup, doesn't exceed 25,000. That is, maximum amount of deduction is 25,000. And Mr. X has also deposited the medical insurance premium of his parents, and the parents are not senior citizen. So here the maximum amount of deduction is 25,000. So for X own family 25,000, and for his father or mother 25,000. So maximum amount of deduction is 50,000. In another example, we can say Mr. X, whose age is 35, and he has deposited some amount to the medical as a medical insurance premium to the organizations. So the maximum amount of deduction is 25,000, including preventive health checkup. And his father, that is parents, that is senior citizen, he will be eligible for deduction 50,000. So here maximum amount of deduction for his own 25,000, for his parents 50,000. So total amount of deduction is 75,000. Another example, Mr. X, whose age is 40 years and whose age is 60 years, that is, he is also a senior citizen. So obviously his parents will be a senior citizen. So in case of X, the maximum amount of deduction is 50,000, and in case of parents, the maximum amount of deduction is 50,000. So the total amount of deduction Mr. X will get maximum rupees 1 lakh. Here a crucial point is to be kept in mind. Crucial point is to be kept in mind that Mr. X, who is a normal person, that is not a senior citizen, that is 40 or 35 years. So he will get maximum deduction of 25,000. On the other hand, the age of Mr. X is 62, and the age of Mr. father of X is 62, and mother of X is 58. So in this case, the eligible amount of deduction, if the amount cannot be segregated, if it is given as a whole, that is fathers and mother are given as a whole, then the maximum amount of deduction is 50,000. But if in a case if it can be segregated, then the deduction for father who is eligible, who is senior citizen, then the maximum amount of deduction is 50,000 along with his mother. We can take an example. Suppose age of X is father of X is 62 and the mother of X is 58, and the medical insurance premium on the life of X, father of X, is 30 and the mother of X is 28. Then at first we have to keep 30 for father of X, and remaining amount 20,000 is to be taken from the mother's medical insurance premium. However, maybe the calculation, the maximum amount cannot exceed 50,000 for parents when one is senior or both are senior citizen. So here it is to be very important to keep in mind the amount of deductions. So in our next slide or next video class, we will discuss the other deductions in details. Thank you.